Every financial influencer will tell you to save and invest. Your parents will tell you to save and invest. Your chartered accountant friend will tell you to save and invest. FINMOM will tell you to save and invest. So when every money that you earn is supposed to go towards your savings and investment, how are you going to pay for your iPhone 14 or 15 actually? Or that Europe trip that you wanted to take since a long time ago? Or maybe get a Vespa or an electric scooter. Those are trending these days, right? Hi, this is FINMOM. I try to make finance simple for you. And today, I'll try to make your life a little simpler for you by telling you ways in which you can meet your short-term financial goals. Now, buying a bike, buying an iPhone, buying an expensive bag, or pursuing a course, things like that fall under short-term financial goals. So, begin with listing out your goals. What do you want to do in the short term? And by short term, I mean a period of 1 to 3 years. So say you have an iPhone 14, but in 3 years you want to upgrade it, or maybe a little sooner than that. Or you want to take that trip abroad because you want to see the world, and nothing should stop you from doing that. I always tell you, enjoy the good things that life has to offer. So let us learn how to enjoy those. Firstly, like I said, list it out. Secondly, prioritize. Now see, you want a trip, you want an iPhone, you want designer bags, you want branded clothes. You can't have it all. Life is not fair that way, at least for some of us. So you have to prioritize. Some things have to wait while others take precedence. So plan it out and see which needs require immediate money and which can wait a little longer. But before you do any of that, like I always tell you in every video, make an emergency fund. Put 6 months of expenses aside in an emergency fund, then start planning for your short-term goals. So list it out, prioritize, and then start aligning every penny of your investment towards your financial goals. Like see, there is an investment rule, right? 50, 30, 20. 50 towards your needs, 30 towards your wants, and 20 towards your investment. Switch it up. Make that 30 towards your wants as 20% and your investment as 30%. And when you do that, use some of your investment amount towards your short-term goals. So while your wants will be fulfilled, they will be done in due time. Now, invest this money in considerably less risky assets. Like see, when you're young, you tend to take a risk, invest in things like equity, which give you a high return, but they have a high risk involved to them. So when you're planning for a short term, you should be able to access your funds and your funds should be readily available to you. So consider investing in less risky assets. The first that comes to your mind is savings bank account. I'm sure they are liquid, they're accessible, and they're easy to withdraw. And you should always keep some amount in your savings bank also. And I'm going to explain why later. So savings bank to begin with. Secondly, fixed deposit, where you put your money in the bank and it gives you a fixed rate of interest. There is no risk involved there, but like nothing is risk free. So there is some risk, but a minimal amount of risk involved there. So FD, then recurring deposit or RD. See, you can also open a SIP, but SIPs are more suitable for a longer duration. So if you are planning to take out your money in less than 1 year or 1 to 2 years, do consider making an RD. Like I said, it is minimal risk. And you can also open a flexi RD. So every month, if you can save some additional amount from your expenses, you can put that in your flexi RD. And with internet banking, taking money out from your FDs or RDs have become very easier. So do consider investing in something like that. And thirdly, this is where the risk increases a bit, are debt funds. Now debt funds also give you a fixed rate of return, a little higher than your savings bank account FD or RD. And again, they are liquid, they're accessible. But remember this, when you redeem from a debt fund, it generally takes 2 to 3 business days for the amount to hit your account after you've done the redemption. So do consider providing for that period. And remember, I told you to keep some amount in your savings bank? This is why. Because there'll be a lag period before the amount hits your bank account. So if you need the money readily available, then you should keep some amount in your savings bank account too. All these funds that we are talking about are ultra short-term funds, and one of those funds are also liquid funds, or funds that invest money in the money market. They are highly liquid, considerably a little riskier than debt funds. So in debt funds, it took you 2 to 3 business days to get your amount. But when it comes to liquid funds, you get your amount within 24 hours generally. So do consider investing a part of your funds in that as well. Now, all said and done, if you watched the video on credit cards, I'll tell you, you can reap the benefit of a credit card in this case as well. If you have a short-term financial goal like buying a phone or buying something expensive, and you are able to do it online and you're able to do it for a discount, then do consider paying with your credit card, because most credit cards these days offer you a 0% EMI. So you don't have to apportion funds and then buy. You can buy it and then use your money to pay it back. So that is one way in which you can meet your short-term goals. But remember, before taking any liability, be sure that that is something that you will be able to pay off. Otherwise, debt trap. Do watch the video on debt trap also, and watch the videos on credit card to know how you can reap benefit from your credit cards. I hope this solves your issue of buying the next iPhone. Please subscribe to the channel if you've not already, and leave a comment in the comment section. Your feedback means a lot to us. Thank you. I hope to see you in the next video. Bye.